Hello, everyone. Thanks for joining and welcome back. Our guest today is a good friend of ours, David Morgan, the publisher of the Morgan Report. And of course, he is a legend in the silver industry. Welcome back, sir.
Ivan, thanks for having me.
Yeah, thank you so much for coming down. I wanted to get you down to talk about everything that's happening in precious metals. For the past month, we had that incredible run up in silver, almost touched that $55 mark. You had the crazy gold prices going up. Now we're starting to see them crawl back down. Or what do you think is happening, David? Is it just a normal correction? Is it or is it being manipulated and spoofed back down? What are your thoughts?
Well, the market is doing what it's doing, regardless of how it got there. And I would say it's healthy for the market, really. We don't want a straight up parabolic move because we have no substantive way to continue the uptrend. In other words, until you build a base and move up from there, you really have a very weak market. It might look strong, and it is temporarily, but it's really healthy for a market to consolidate, and that's what we're seeing here. I think a lot of it had to do with this arbitrage between the London market and the COMEX. And I think that's being resolved as we speak because the market speaks volumes. In other words, what was referred to as backwardation, which truly isn't backwardation because it's not in the COMEX, for example, but it's in the LBMA, which is the forwards market, and it's over the counter and it doesn't have the transparency that the
Right.
COMEX has. But regardless, the spread was like $2 or $3 a few weeks back, and now the spread this morning is somewhere around 7 cents. So that means that it's correcting, and I believe that So the market's saying that. That's not me saying it.
Hmm.
And the other thing is the price. I mean, if the market was in such a squeeze, the price that spread would remain or $2 or $3, and the price would level or continue higher. It's not. It's sold off substantially. So what does that mean specifically? One, the market is starting to clear, especially on the paper side, Ivan. So
Hmm.
we're getting down into a level that probably a lot of the shorts that were maybe sweating it for a while are able to cover and regroup, and the game probably won't end. And on my own behalf, I will say that my members know that I have what I call the Morgan rule. It's not it sounds egotistical maybe, but it's just keeping things simple. I mean, all the trading and investing, speculating I've done, so try to simplify things along the path. And one of them is once you make a breakout from a horizontal line, a specific number, and you remain there on strong volume like 3 days in a row, you have a very strong probability that you have a breakout and not a fake out. But the
Right.
probability is not 100%. It's like 80%. So we did that at the $50 level. But prior to that, I'd said, and I'm going to reiterate it, that I saw the 50 level being cumbersome for the silver market. I saw it probably going through and consolidating, coming down and going through one, what I consider one last time. Excuse me, one last time. Could
Hmm.
be true, could be false, to be determined. And that would be about it. So this market doesn't surprise me that we're going through this kind of congestion, this kind of sharp pullback, but it will consolidate. And I do think strongly it will go through that level again. And I believe it'll hold it. But, again, the market knows more than I do. So that's where we're at. As far as how much physical silver is required to get to the LBMA for the market to clear, is an unknown to me. There's some people well established, well known, and well recognized on X and other forums that are talking about a specific number, like in the 150 million ounce range. It could be. I don't
Hmm.
know, but I did my weekly perspective, as you know, I do every weekend, 2 weekends ago. And I said, if that number is correct, that's going to be significant and would take a lot of metal out of the COMEX. However, based on what we just discussed, the market's pretty much cleared paper-wise right here, right now, probably a few more days. That indicates that whatever the actual requirement was at the LBMA might not have been that high. And in my weekly perspective, I said, if it's, I forget what I said, 30, 40 million ounces, somewhere in that range,
Hmm.
and there's things will go back to normal. Lease rates will go back to normal. The contango will be at the LBMA, et cetera. So that's where we're at. And I don't think we need to ship another 100 million ounces from somewhere to the LBMA for this market to clear. I think it's clearing as we speak.
Hello, my silver and gold bugs. I just wanted to say thank you so much for watching the video. Hit the subscribe button, hit the like button, and also hit the notification bell so you don't miss any future uploads. Back to the video. Yeah, and I'm totally with you, David. I feel like you have to have some sort of healthy consolidation, and yeah, we'll see in the coming days or the coming weeks to see if it holds off at these levels. Is there anything that you're looking at that concerns you in the precious metals market?
Well, I would say that this squeeze situation is probably far from over.
Right,
I don't want to be too hypey. You know me, I'm probably one of the calmer voices in the space.
right,
But nonetheless, the setup right now is not that easy to resolve, as we've witnessed. I mean, going from 54, you said 55. I know it printed, I'm pretty sure it printed near 54, maybe higher. And now to be at, I don't know what we're at, 45. And again, I did an update for our, paid members. And I said, 45 is about as low as I'd see it going in a very strong market. And we're at 46 and change as I look right now. Doesn't mean it couldn't go below 45, but 45 is the 50-day moving average. In a very strong market, be it soybean oil or wheat or silver, if it hits the 50 level and bounces off of it, that's a very strong indication that this market has got a long ways to go to the upside. Having said that, coming back to the squeeze, obviously, when you got to start shipping real metal to new locations, something's really going on. I mean, almost
right,
all the stuff, as I've said 1,000 times, the silver market is a derivatives market. It's
right,
like the blocks of silver are just an aside issue, except it's not an aside issue. You can't print silver, although it's done all the time. I think you're following me. I hope our listeners are. So there's a point in time where, pay up or shut up. I need those blocks of silver. And, what is it, 8 cents to ship them by boat and 15 to ship them by plane or whatever it is per ounce? Not a ton of money, but the idea being if you've got to play the shell game or moving the shells around and the peas under one shell, et cetera, we're in a position where that's what we need to pay. We need to pay attention to everything. But that's one that specifically you can really focus on because wait a minute, all is not well in Paperville because Paperville's got to get blocks of silver and move them around. Go
hmm
from this shell to that shell for the game to continue. Now I want to overemphasize that, Ivan, but it's an obvious thing to see for everyone that's looking. And whether or not this ends it and happy days are here again and the market continues as it's done for so many years, I have my doubts. That's what I'm saying.
What about there's so much talk right now about interest rates and inflation continuing to rise higher, and how are they going to be able to lower interest rates with this financial bubble we're in? What are your thoughts there, David?
I think that the market will start to take control more and more. We've already seen some hints at that. So even though that the Fed sets the discount window, does not mean that the market itself will agree with it. So they have done that recently, and the 10-year note actually stayed put or went up slightly. So the market's starting to take control of what the price of money is. And the debt markets are under a lot of stress. We've seen, the whole most substantive part of the financial system being the United States Treasury market as being sacrosanct. There's nothing safer or better than the debt markets from T bills, T notes, and T bonds. That's being questioned more and more and more. You have many sovereign wealth nations that say no mas, they don't want any more U.S. debt, and
Right.
gold has overtaken that of late, where gold is actually stronger part of a balance sheet in some of the central banks than U.S. Treasuries are. So that whole market is being questioned. and will be questioned further. And you can see it in answering your question, but moving on a slightly different topic, the crypto world. I mean, all this talk about, Bitcoin possibly being a reserve, having a Bitcoin reserve, looking as an asset, that we could use against the balance sheet or whatever. So there's a lot of questioning on how much longer this debt-based monetary system, with the U.S. being in the lead, is going to continue. So great question, and let's watch interest rates, what they do, because we could see a lowering by the Fed, and yet the market ignores it, goes higher, or says thank you, and we get a sell-off or whatever. So it's been the one that I think I haven't emphasized enough, although many of what I consider to be the best in our business, really, when you get away from metals, the most important thing is what I call the keys of the kingdom, and that is the U.S. bond market. That is the key to everything. Because if you lose faith in the dollar, what it's worth today as a piece of paper with the president's picture on it, enough, you're certainly not going to trust it 6 months out, 6 years out, or 30 years out. So that is what's coming into question more and more.
Mm-hmm.
And I know that the government will do whatever they can, which is why they've done this thing with the stable coin to basically force the market to buy treasuries. And I said over a decade ago, Ivan, that I saw a day where, like, the self-directed retirement plans in the United States would require that part of that self-direction goes into the bond market. In other words, yeah, you can have your tax-free, or tax-deferred, I should say, retirement plan, but 10% has to go into the treasury market. They haven't done that yet, but I see those type of things coming to the fore, because people don't want it. They want
Right.
gold rather than bonds. So I know it was a long answer, but it's really key, because as long as it's a war between real money and paper, and the
Absolutely.
paper isn't the derivatives of silver and gold, although that's a subset of it. The real paper is this piece of paper that says, backed by the full faith and credit of the United States. Well, that's the amount that the government's able to tax their citizenry, which is beyond belief, because you can't tax the citizenry over 100%. And of course, if you did, you'd have a revolution. And so it's at a rate that's, I'll say, tolerable. So they make up the difference by printing and printing and printing and printing. And we
Right.
went up, what, $1 trillion in what, 6 weeks or 8 weeks? I forget.
It's
It's
crazy.
phenomenally quick. Yeah.
Yeah.
There's about $15 trillion worth of physical gold in the world sitting there costing money rather than being used. Is just absolutely insane. Monetary Metals is bringing gold back into the financial world, putting gold to productive use right now. The problem with gold, of course, in physical form is that it's heavy, it's cumbersome, it's not particularly easy to ship, and it costs money to store in a protected manner. This platform Monetary Metals created is a proven concept and allows gold to be put to productive use, so that instead of sitting there costing you money, it's actually in use earning you money.
Learn how you can earn 2 to 5% in our leasing program, and how accredited investors can earn up to 12% on silver paid in silver. This advertisement is not investment or financial advice. Minimum investment applies.
Yeah, it's 38 trillion now, and you're right. If people start, all it is a house of cards, is fiat currency. You start losing faith in the system, then that's it. It'll start collapsing. But David, I wanted to ask you if you heard about Morgan Stanley coming out and changing their perspective to their clients. For the longest time, they were 60-40 was their stock recommendation, 60% stocks, 40% bonds. Now the CEO of Morgan Stanley came out and they're saying 60% stocks, 20% bonds, 20% gold. Have you heard of this?
I have, and I'd appreciate it off air if you send me a link to that if you can,
Sure.
because I want to do an update for my weekly perspective this end of this week, because I have some insight into Morgan Stanley and what they pulled off in the past to silver investors, and I think it bears repeating. I've got that documented, so
Okay.
I want to look at that. But yeah, this is very important, and some of the more well-recognized silver experts out there, like CPM Group or the Silver Institute. CPM Group did a study on how much gold, it's not silver, you need in a portfolio from 1968 till whatever the date was, probably 2020, 2021. I don't recall the exact date. But Jeff did that study, and you wanted 25% gold to. So it sounds absurd to the non-metals heads, the people that don't know what's going on in the financial system in a
Right.
big picture. But yeah, it doesn't surprise me that the number's that large.
Yeah. David, I want people to connect with you and follow your work. I know that you have a movie, a documentary coming out. Is it out yet or is it still being worked on?
It launched on October 22nd. I left the comments open, which you don't always do. Almost all of them been favorable. So thank you, everyone. A lot of heart and soul in it. And so that is up at silversunrise.tv. It's free. I don't sell anything at the end. If you want to contribute, fine. If you don't, fine. But please spread the word. And again, most of the comments so far have been pretty favorable.
So silversunrise.tv. I highly recommend everyone to go check it out. Go follow the Morgan Report. I'm going to put the links in the description below. But David, thank you so much for coming down. Always in the precious metals market, it's people are keeping their eye on, they're keeping their hopes up. This run in the past month, 2 months, or the whole year for precious metals has been incredible. So yeah, it's I really appreciate you coming down and speaking to everyone.
My pleasure. Thank you.
Talk to you soon, David.